Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Wednesday, March 4th, 2009. It's 11:30 a.m. Eastern Standard Time in the U.S., 4:30 p.m. in London, 12:30 p.m. in Bermuda, and 9:30 a.m. in Mexico City. If you need to contact us during the broadcast, you can phone in toll-free from the U.S. at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. Prime Minister Gordon Brown of the United Kingdom is addressing a joint session of Congress right now with a ringing reaffirmation of the special relationship between Great Britain and the United States. He no doubt will also talk in a little bit about his plan for a global financial regulatory overhaul, so we'll be listening to that as well. Now to the news. Economic news from the U.S. U.S. private sector firms cut 697,000 jobs in February, according to the ADP Employment Index, which is based on millions of company payroll records. The ADP index was released this morning at 8:15. It showed that goods-producing companies shed 338,000 jobs, and the service sector dropped 359,000 jobs. The ADP survey adds in typically 12,000 jobs that are gained in the public sector. So as a result, the payrolls fell by 685,000. Most economists have been predicting a drop of 640,000. The stock market seems to be shrugging it off. It's up about 156 points now. In other news, Hartford Financial Services Group, one of the insurers, as you know if you've been watching this broadcast, whose stock has been decimated lately, is in talks to sell most of its life insurance unit to Toronto, Canada-based Sun Life Financial. This is according to Bloomberg. Hartford held separate talks with MetLife, but those ended last month without a deal. In an emailed statement, a spokesman for Sun Life said that, quote, "The numbers of rumors and speculation have increased recently due to the current economic climate. Without commenting on any particular situation, our commitment to business growth includes looking at all potential opportunities. Sun Life has made it clear that it's shopping for growth south of the border." According to John Basha, the executive in charge of Sun's U.S. operations, "We're not a significant company in the U.S. at this point, but we desperately want to be." Hartford, of course, lost $2.7 billion U.S. in 2008, reversing its 2007 profit of $2.9 billion. Chief Executive Officer Romney Eyre has been struggling to try to keep the company's rating on an A level and is in line to try to receive TARP funds, although the government has not given any indication yet that insurers are going to be eligible for them. Yesterday was a busy day on Capitol Hill on budget testimony and bailouts. Of course, AIG's name came up a number of times. Calls increased yesterday in front of the Congress by senators to reveal the financial institutions that got almost $40 billion in collateral from AIG after the government first bailed the insurer out last year. You may recall that AIG almost collapsed in September after ratings agency downgrades triggered demands for billions of dollars in collateral from firms that had bought derivative-based protection from AIG on collateralized debt obligations. AIG was saved by an emergency $85 billion loan from the government. So by November 5th, AIG had paid out $37.3 billion of that money from the taxpayers to counterparties who had purchased a certain type of derivative-based protection from AIG called multi-sector credit default swaps. This is according to AIG's third quarter filing. Since then, AIG and the Federal Reserve Bank have unwound most of those contracts. This is how they do it. They offer to buy the collateralized debt obligation that was originally insured by the agreement. The counterparty sold those assets at a discount but were compensated in full in return for allowing AIG to extricate itself from the obligation. The counterparties also got to keep the $37.3 billion in collateral. Counterparties have never been disclosed publicly. However, banks that did receive collateral from AIG included Goldman Sachs, Merrill Lynch, Union Bank of Switzerland, and Deutsche Bank. So now that the U.S. government's bailout of AIG has reached about $160 billion, some politicians want to know which financial institutions are benefiting from the taxpayer support. Senator Ron Wyden, a Democrat of Oregon, asked Federal Reserve Chairman Ben Bernanke yesterday, AIG has given the counterparties $20 billion. Those people could be just about anybody in the world. Why won't the Fed disclose who they are? Bernanke said that the counterparties made, quote, legal, legitimate financial transactions with AIG and presumed at the time that the contracts would remain private. The chairman said this is a consideration we have to take into account. The insurer's portfolio of credit default swaps was still notionally worth about $302 billion at the end of 2008, despite government-supported efforts to aggressively unwind it during the fourth quarter. This will in no way be the end of this discussion. News coming from Asia that AIG's Asia-Pacific unit, American International Assurance Company, said this morning that it's considering an IPO as part of its plans to review strategic options for the company. The insurance operation said that an IPO of its shares will take place dependent upon market conditions. The Hong Kong Economic Times reported this morning that AIA plans to list in Hong Kong. Other people are saying that Singapore is trying to get the listing in their city-state, but AIA has decided that it's more appropriate to list in Hong Kong given the high proportion of AIA's policy holders based in the territory. One final point on AIG. This is coming from the Royal Gazette in Bermuda this morning. Staff at the Bermuda offices of AIG were told yesterday that their work would remain unaffected by the turmoil surrounding the New York-based parent. AIG employs about 200 people in its building on Richmond Road in Pembroke, and apparently George Cubbon, who's the president and CEO of AIG's Bermuda operation, said, "We're not expecting any impact at all." Getting some feedback now on the Turkish Airlines 737-800 that crashed short of the runway in Schiphol Airport outside of Amsterdam. The plane crashed short off the runway by about a kilometer. Investigators are now saying that a faulty altimeter may have played a role in the crash. The Dutch Safety Board chairman Peter van Vollenhoven said that the plane was landing on automatic pilot and that the problem with the altimeter led to a loss of speed. He said that the exact same plane had twice before reported problems with its altimeter. The plane crashed just short of the runway. It hit the ground tail first, which is where a plane would hit the ground if it was landing when the lower wheels in the back hit, and then broke into three pieces. Stock market is up about 158 points. We'll go to a word from our sponsors and come back with the rest of the news.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity.
Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
Here's an interesting story. Everybody's concerned about global warming. This is from the Associated Press. An asteroid about the size of the one that blasted into Siberia 100 years ago just buzzed by our planet. NASA's Jet Propulsion Laboratory reported that the asteroid zoomed by Monday morning. The name of the asteroid is 2009 DD45, and it was about 48,000 miles from Earth. That's just about twice the height of some telecommunications satellites. The asteroid measured between 69 feet and 154 feet in diameter. According to NASA, it's about the same size as the one that crashed into Siberia in 1908 and leveled more than 800 square miles of forest. Most people probably did not notice